Hello again, everyone, and welcome to the Options Mentor. Well, this market has certainly done no favors to us as non-directional traders, has it, over the last couple of weeks since the announcement of the tariffs. Over the weekend, some developments, though, apparently some of the electronics are going to be exempt from the most extreme part of the tariffs. I think they're down at 20% as opposed to whatever it is, 100 or more. So maybe that will give the market a little boost into the coming week, but that's certainly not something we can count on. Now, this coming week, as far as your general market news, reports and stuff, there's really not much there. In fact, we're closed on Friday because Friday is Good Friday, so we have a 4-day week ahead of us and then that 3-day weekend. So, what can we do here to stay active other than like spec trades, back ratios, or maybe you're picking direction by buying or selling verticals or flies that are way out of the money? Those are all, of course, totally viable. And I would suggest that anything you do in this market, you do very small. Don't take chances with things, including what I'm about to show you today. I'm going to show you something in SPY because we can do it so much cheaper than if we did it in SPX. Now, with the VIX over 30, I don't normally like to do any kind of, wide complex trades where you're counting on the market um, to stay in a range that can be difficult. And I know a lot of folks go, oh, iron condors, this is great. Well, the problem is iron condors, if you take a look at it, if it moves hard and fast enough, you'll be underwater. You'll be underwater in a hurry. And to me, that trade does not impress me at all. So I do still like, if you're going to do something, then get yourself in some form of a wide butterfly if you want to do something at all. And like I said, if you do, it should be very small, something to keep you active. And maybe, I'm not big, like I said, on trading with the VIX above 30, but perhaps we could learn something here without risking a lot of money and actually maybe even make a few bucks. So let's take a look at something here. I'll share my screen and we'll start out looking at this SPY chart, which of course is incredible, right? All the way up here to almost 550, all the way down to 480. That's a lot. That's a lot. And I don't believe there's anything you can do in the fly range to encompass all of that, and say, okay, it'd have to go outside the last, the current ranges that it's been in the last week or so. I think it's going to be tough to get something like that. But if we look over here, what I've done here, I went out to May 2nd, which is, I believe, 19 days out. Yes, 19 days out. And what I did, we finished the day. I'm just using Friday's close as an example. If you're going to do something like this, obviously you're going to do it with whatever the current number is tomorrow. Today's Sunday. So whatever the current number is on Monday is what you'd want to use. And what I did with this is with the put side, I went down 100 or 11 points, and then that was my center. And then I went up 11 for the top strike and down 12 for the bottom strike, much wider than I would normally do. Same thing here on the call, except I went up 11 to find the center and then up 11, down 12 on that one. Also, now this trade has a little bit of margin with it because it's an unbalanced put fly here. So the put fly would cost you about $150, $96 in margin, $58 in debit. And the call fly would cost you about $188. Now you could do them both with call flies and everything and be in the debit. I mean, to me, I don't think you have to do that. Just simply add the margin in here. Both these flies are going to work the same. They just have that margin with a small debit as opposed to everything being in the debit. So don't let that shake you up whenever you see it. So once you have this trade on, I might even try to get less than 10% just to get out. Because if we look here, the expected move, say between now and even this Thursday, which will be the last trading day of the week, is $25 in the SPY. That's up or down. And if you wanted to go out to Monday, it's $30 essentially. So let's look and see what we got here. So what if we went up $25? Well, you'd be at the very upper end of your range, wouldn't you? In fact, you wouldn't quite. You'd be, if we went up a full 25, you'd be a little not quite there, right? And you're out, you'd be a little outside the break even. And then on the downside, also you'd be outside the break even. Now, if you just, and if you went, of course, out to the 21st, it would be even more profound. But I don't know that there's really anything you're going to be able to totally contain where you wouldn't have to make a trade repair, adjustment, whatever you want to call it, which you could still do with this trade if you needed to at these extremes and give you a lot more room. I think that if you manage this trade properly, if we didn't get anything too crazy on moves, I think that you could do it. Now, hey, look what happened the other day. What did we do? Go up 50 points in the SPY really quick because we went up 500 points in the SPX really quick. You remember that whenever Trump put a 90-day pause on the tariffs? That kind of thing's going to be tough. So you need to be around, right? This isn't a trade you put on and then you're really busy at work or something, or out of pocket on a plane, whatever it may be. I wouldn't do this. Hey, but if you're around, maybe you're a person who's retired or for whatever reason you like to, be around the screen most of the day, or you're willing to do it, then I think something like this could be educational and relatively inexpensive. Now, if you look at this trade, I mean, it's going to cost us what, about $350. That's the most you could ever lose in this setup. So just remember that. By the way, always use limit orders. There's no other order you'd ever use in option spread trading but limit. You certainly wouldn't use market because you'd get the worst fill ever. We're trying to get filled at the mid prices. You'll get the bid or the ask. It'll be terrible. And if you use a stop order, stop becomes market if it goes below a certain point. So I would encourage you to only use limit orders. And if you have to be away at all, just set an alert. Maybe an alert. Hey, if the SPY gets to 550, send me an alert, text, or whatever you do with your brokerage. Or maybe if it gets down to 510 or something like that, then you'll know. But if you don't get any alerts, provided the system hasn't failed, you should be inside your range. But that's kind of a way of keeping track of things also. So I think a trade like this is small. I would consider really speculatory, that you could keep something in it. I do think you have a reasonable chance in this trade if you know how to manage it. But we are in very, very volatile times. And you couldn't be surprised if it blows up on you either. That's why we want to use a very small amount of money, so we're not putting that much out there at risk if something goes wrong and we get some 500, 600, 700 point move in the SPX in one day, or 50, 60 point move in the SPY one day. Now, hopefully, a lot of these, tariffs are paused for 90 days. I'm hoping and thinking that the market may come around to that and lower the volatility for a while, probably go through all this again in 90 days. But I would not be surprised if we come into this week, if that text do take that news as good, that the tariff will be back at that lower rate and the market sort of stabilizes. I don't think you're going to see VIX under 20, but I do think we have a decent chance of getting the VIX under 30 this week and have a little more peaceful trading that we could do. Maybe I shouldn't say peaceful, but a little more manageable. I mean, the VIX is at 37.5 right now. The other day it went down 10 in one day. Remember, they had to actually halt it. But so we could get down there pretty quick if the market would just stabilize. And remember, there's a lot of money coming into the market that has to buy all the 401ks. That money's coming in every month. Boom, boom, boom. And they have to buy with it. So there is that underlying the market that could help us here some. And a lot of times these violent moves like this are fairly short term, but we'll see how well this one treats us. I believe in 2008, I think it was difficult to do any of these spread trades for like 4 to 6 weeks, I think it was. And sure, that could happen again. But I'm thinking that maybe here soon, maybe not tomorrow, we could get a little bit of stability, VIX lowering at least for a while, unless something brand new comes up. You got to be careful. Or, like I said, in 90 days again, we'll see where we're at with the tariffs. Inflation did come down pretty remarkably this past week, so the underlying economy is still okay here. But of course, the tariffs are looming, and a lot of businesses feel like they'll struggle with those. So this is kind of my idea for this week. I'll be back with you next week. We'll see where we're at then and see what we can do going forward. Everyone have a great week. Have a great holiday weekend coming up here at the end of the week. And I'll talk with you again soon. Have a good one. Oh, don't forget to subscribe and like the videos. Thank you. And check out all the links in the description so you can be with me every day over at arimer.com. And don't forget, my trade alert service is 14 for 16 for the year. It's very profitable, doing very well in it. And you can join up for that over there too. So check all those out. Have a good one, folks. Bye-bye.